All right, super. Great. Great acoustics, though. Thank you very much for joining. I don't know if I'm too loud or too low, like I have no idea. So we're going to talk. I was trying to think if I could come up with a more confusing title for the session today, and I couldn't come up with anything. So we're going to talk really about how statistics and machine learning and a different approach to analyze crypto assets that reveals very new insights that you cannot find anywhere else. So the session has two parts. In the first 10 minutes, I'm going to try to brainwash you and convince you that crypto assets require a new form of analysis with blockchain data as a first-class citizen. In the second part, we're going to look at data and indicators and analysis, and I have a bunch of questions for you guys and see what the data says. Sounds good? Cool. So a little bit about myself. I have a background in artificial intelligence and distributed computing. Used to be a distinguished engineer at Microsoft. Built quantitative trading systems for a while. Have had 2 exits as an entrepreneur. I'm an active investor both in the blockchain and AI space. I'm also the CTO of a platform called IntoTheBlock that is a data science market intelligence platform for crypto assets that is in beta. Today, I'm also a chief scientist of this firm called Invector Labs that is a boutique studio for both AI and blockchain, and we work with very big companies building this type of solutions. So I have like a personality disorder type of thing. I do a lot of investments, and I'm also a speaker and author, regular, write pretty much every day. So let's start with a very obvious statement. Crypto assets are a new asset class and requires new fundamentals. You're going to be looking at that and say, like, what the heck? I mean, that's pretty obvious. At the end, every single asset class in history has brought some unique factors to its analysis. So commodities shows that you need some supply-demand balances. Currencies are 24/7. Trading with bonds, we learn about dividends risk. So what's very unique about crypto assets? So a few things you heard, I'm sure. Markets are irrational. There is no direct... That's just great. So there is no direct correlation between crypto and other asset classes, and there is content hacking. Does this seem familiar to you guys? I mean, it's all BS. So crypto has 2 things that are different, that are unique. One is that it can be used to power applications. You cannot power applications with commodities or bonds or things like that. The second one is that the behavior of individual investors is recorded in public ledgers, available to everyone. So as a quant, this is a dream, because crypto might be the richest asset class in history, which you might think, I mean, that's crazy. It's only been 10 years. Yes, but it's the only asset class that records individual investor behavior in a blockchain, in a public ledgers that are available for mining. So if crypto is so different, why in the world do we try to keep analyzing using technical analysis and fundamental analysis like any other asset class? So that puzzled me, and there is a theory in economics that sort of said that there is a direct correlation between the lack of transparency in a market and the sophistication of the analysis that we create. So something like this, the less transparent the market is, the more complex forms of analysis we have. That's why analyzing derivatives is more complex than analyzing commodities and things like that. Given that blockchain brings transparency to that, applying the counter-argument here, we should conclude that crypto should have very simple indicators that people can understand. Instead, we do this crap, right? Instead, we keep going to technical analysis and come up with all hypotheses that they don't quite work, and when they don't work, we come up with another alternative. So analyzing crypto by just price and volume is great. I mean, it works sometimes, but you're ignoring about 80% of the data. So why would you do that? So a thesis that when we started IntoTheBlock, we came up with this overarching thesis that crypto requires a new form of analysis, and because we really sucked at marketing, came up with this thing called crypto asset fundamental analysis. That is what will happen if we put data science and machine learning and deep learning and all these techniques at the intersection of blockchain data, public market data sets, social data, and try to come up with indicators that are very unique to the crypto space. What the heck does that mean? If I need to describe an asset to you, I'm going to use some 5 or 6 fundamental vectors, fundamental dimensions. I'm going to describe it financially. Are people making money or losing money? What's the transactionality of this asset? I'm going to describe it in the form of a network. So crypto assets need networks. What's the composition of the network? Is it growing well? I'm going to describe it in the form of ownership and counterparty. Who owns this thing? Who are the whales? Do they trade? Behavioral, the fact that we can see almost every transaction in the blockchain. We can analyze individual investor behavior. Are they confident? Are they anxious? Are they likely to sell? Likely to buy? And obviously social, because crypto is irrational, it's still very vulnerable to social indicators. So if all that work, right, this is what we should have. We should have a form of analysis that puts blockchains at its core, at the very beginning, uses data science on top, and then comes up with indicators that a normal person can understand. I mean, it's not always the case, but we really try hard. Did I brainwash you? Do you find that thesis compelling? Yes or no? All right, so we're gonna play a game now with these acoustics that sort of suck. So now I have like 7 puzzles. I'm gonna ask you a question, and then with possible answers, you're gonna raise your hand or give me different answers, and then I'm going to show you what data science tell us. I mean, all the charts that you're going to see are part of the IntoTheBlock platform, but I'm not talking about the platform. I'm just showing you the type of analysis that can be done. So Bitcoin is hovering 13K today. You have to guess, right, from 20K to 13K, what's a percentage of Bitcoin investors that are making money that have realized gains? 50%, 70%, what do you think? A lot, a little? A lot of people making money, a lot of people losing money? No idea? So this is an analysis that we call the in and out of the money, that what it shows, we take every single transaction in the blockchain that has been recorded, and we use what is called a clustering analysis. We look this address bought here, so here, bought here, so here, and then we partition that population in its 10 most significant groups, depending whether they're making money or losing money. So this chart is showing you that the bulk of the Bitcoin investors are in the money. And there is a bucket that bought between 12,000, 13,000 and 20,000 that they're out of the money. Why is that important? A few things. The next price movement, that gray, I don't know what the laser is here, but that gray circle and the red circle are going to be the buckets more sensitive to price. If you're going to place a stop loss, technical analysis, chart this is more objective. You can see who's on the other side. It's not a subjective thing, right? This is telling you there are 2 million addresses that are losing money between this number and this number. So how does that look for Ethereum? Ethereum and Bitcoin move together, right? So if people are making money with Bitcoin, would you think that Ethereum is also up? Yes, no? Look at that, a lot of red. So same analysis, Ethereum has a ton of walls to climb. So the Bitcoin chart is telling you that there are no sellers. So all the money that is coming into Bitcoin is new money. That's why the price goes up. Ethereum still has to fight a lot of walls to climb to its all-time highs. Does that make sense conceptually? So let's talk about stablecoins. I'll tell you an anecdote. The first time I saw the chart I'm going to show you, I sent it back to my head of data science. I said, hey, can you check this? I think it's wrong. Then he said, yeah, it's cool, it's good. Then I sent it back and said, hey, could you check it again? I said, yeah, it's good, it's great. And then I sent it for a third time. This doesn't make sense. And the email came up with 2 words, fuck off. Right? So the thesis here is, can you lose money with stable coins? How much money can you lose with a stable coin? If I tell you, let's take 2 stable coins, and I tell you what's the price that stable coin will have to go for some investors to recoup the investment they have made, what would you say? $2, $3, $10, 20? All right, so let me show you this chart of Tether. It said that there's some investors, so this is what we call break-even analysis. It's similar, but we look at realized gains, and we tell you where the price needs to go for people to realize, to break even. Because if you already made money, doesn't matter if the price goes up or down or sideways, you're not going to trade. But if you're under and you haven't realized gains, and the price is approaching your break-even point, you become a seller. So there are people, the price of Ether has to go to 1.9K for some of those guys to recoup their investments. Those guys deserve a statue on the Ether headquarters, like right there, like the most devoted investors ever. But if you look at DAI, that is more rational, it's also not, I mean, it's also not great. I mean, there's some people that the price has to go over $10, close to $10, for them to recoup their investment. So this gives you counterparty analysis, right? You're looking at who am I playing with? When I'm buying and selling, who is on the other side of that trade? Should I be concerned about whales? So whales suck. I mean, they own a ton of percentage of tokens. If they trade, they move the price. So should I be concerned about whales? Let me show you two tokens, and you need to pick right or left. This is the red is the percentage of the token that is held by whales. And then the rest is retail and investors, like non-whales. So right or left, which token would you like? They're both similar. They're both smart contract platforms. Right or left, which one would you prefer to get in? Left? For the left? You like one with more whales? You're crazy. So for the left, how many? That's majority. So that's Ethereum, and this is Ethereum Classic. Let me show you two others. So now we look at whales. Whales only move the price if they trade, right? Now we look, okay, we know that 20% of this token is owned by whale, but do they trade? If they don't trade, doesn't matter, right? So the red circles are the percentage of the whale population that trades. The blue circles are low passive investors. They don't trade a whole lot, only whales. I sucked it up. So left or right, what do you pick? With that analysis, for the left? So right? So you pick Ethereum as well, that's very good. I mean, most people get it backwards. So that's telling you that the whales on Ethereum Classic are more impactful than the whales on Ethereum. This is a situation that you don't want to be on. A token that is completely owned by whales and that the whales move close to 100%. And that's our friends at Polymath. That's a current analysis. I didn't show the number of the red because it's sort of embarrassing. So, but that, I mean, this is a token that you don't want to participate because it's completely owned by whales and they trade. I mean, it sucks. So another analysis is new money coming into crypto assets. Remember the picture of Bitcoin. Everybody's making money. So who sells? New money. So if new money, if new addresses come in, they buy, right? So when you look at a new at a token, the percentage of new investors is important. This is a picture of Litecoin. You see Litecoin has been moving a lot lately. It's healthy. You see a ton of new addresses, a ton of new money coming in. That's fueling the price. We can see that because we're looking inside the blockchain. You cannot look at that by just looking at price and volume. And now it's money flowing out of an asset. So there are plenty of analytics platforms out there that will give you an address count. Is the network growing or shrinking? The number of addresses on the network, how does that work? I mean, let's not be lazy. Let's take it a step down. Let's take it a step more granular. So let's look at addresses, but that's a total. But are they active? So do they trade? How many are new? How many of their balances go to zero? That they're being counted, but it doesn't matter. The balance is zero, so they're out. So this is BAT. This is a healthy token. It's adding more addresses than the addresses are dropping out. This is Huobi. This is not ideal. The number of new addresses and addresses dropping out is correlated. It's almost 1-to-1. So the network is not growing, right? Even if there are new addresses coming in, the same number is going out, and sometimes the yellow line is trending over the blue line, which means more people are getting out than coming in. Does that make sense? Cool. Does trading happens when I'm sleeping? We're in Spain. Do you want to trade tokens that mostly trade in Asia? Do you want to trade tokens that mostly trade in the US? You go to sleep, you wake up, the price is, on the other side of the spectrum, and you have no idea what happened. That's important. So I'm going to show you two tokens with an analysis that we call the East versus West. We look at every transaction and timestamp it whether the trade happens on Asian time zones or on Western time zones. So as a Spanish investor, they're both decentralized exchanges. They're both decentralized exchanges. So blue is east, red is west. And then you have the number of transactions. You can see that one token is dominantly east and another one is predominantly west or sort of. Which one do you like, left or right? Left? Everybody likes right? That's Kyber Networks and 0x. So if you're investing in Kyber, you need to realize that a lot of the trading happens in Asian time zones. So you're overexposed if you're in New York, right? And the opposite, if you're in Shanghai and you're looking at 0x, you're also overexposed. So this is the type of analysis that data science gives you. So how does this work? The first version of IntoTheBlock has over 32 proprietary indicators that were created by data scientists and statisticians looking at this. If you look at off-chain, start with on-chain data and plug in off-chain data set pricing, order books, social, Google data, alternative assets, and apply data science, we have proprietary indicators that go beyond price and volumes that are unique for crypto. That is not your technical analysis, it's your technical analysis with other things. If we apply data science to those indicators, then we have signals. We can start saying, hey, this is a bearish signal, this is a bullish signal, this is a bearish signal. And if we apply data science to those signals, you can start playing with trading strategies. Right, and this is how this cycle should work, by looking at on-chain data as a first-class citizen. So there are challenges, of course. I mean, this is not a pie in the sky. Exchanges create a ton of noise. They fake addresses, they bundle transactions together, they report after hours, all sorts of crazy stuff. The anonymity is complicated because sometimes you don't know if this is an OTC desk, a hot wallet, cold wallet, and obviously the fake volumes is a problem. We are trading classifiers. Machine learning models are going out and identifying exchanges, identifying OTC desks, trying to put labels on that information so we can do the analysis, removing all the exchange data. We can analyze inflow, outflows, and other things. It's brutally difficult. But obviously, we're not trying to solve any easy problems here. So we have a team of data scientists that their only job is to solve that problem. And we're making a ton of progress, but obviously this is a challenge. Now, the noise is not statistically significant. We have been validating the models with quant funds for months, and they're solid. But they exist, right? We try to be very transparent, and this is obviously a problem. So this is what I want to leave you with. Crypto assets requires a new form of analysis. Fundamental analysis is pointless. Technical analysis work. Quant analysis doesn't have enough data to work yet, and the models are not adapted to this world. But if you take what technical gives you and extend it with blockchain first data and take advantage of what you can get by looking at individual transactions, it's another dimension. Blockchain data set should be your first class citizen. And on top of that, you can put pricing data, order books, all sorts of things. And the answer is with data science. It's not people looking at this. Algorithms find nonlinear correlations between all these factors that humans just can't see. Does that make sense? So this is my contact info, my email. I write every day on Medium, so you can message me through that. If you like what you saw, IntoTheBlock is in beta. You can sign up. The backlog is huge. I mean, the list to get in, but we're processing through it very quickly, so you should get in a few hours your activation email. It's a beta, but you're gonna start playing with and give us a ton of feedback. This is a big problem. It's a problem we're trying to solve. This is the only part I'm gonna talk about IntoTheBlock. This is a big problem that we're trying to solve. So the more feedback, we try to bring a ton of smart people in to solve these challenges very early on. But the more feedback we can get, the better. With that, questions? Yes, sir. Sí, en español.
¿Me has oído?
Sí. No, no te he oído.
Vale. Digo que todo esto que estabas explicando, si yo quiero ver, por ejemplo, lo healthy que es Ripple, ¿puedo ver exactamente los mismos gráficos que has mostrado? ¿Se pueden...?
Sí. the question is if I want to, how many tokens does it include? Over 3,000. So we cover everything. We replicate 20 blockchains real time and lay it on top of a ton of off-chain data on top of it. And it was built in a way that you can plug in new data sources and new machine learning models and get new insights. So from people that have been playing with the platform is, I want to see the correlation with the Nikkei 225 or something. We go and plug it in.
Vale.
I mean, it takes some time, so we can do it. Any other questions? Questions going once, questions going twice. All right, thank you very much for joining and enjoy the show.